Hello, welcome everyone. Welcome to our virtual book launch right here on our Facebook Live page. If you're joining us, thank you for your time for joining us. We are seeing that some people are already asking their question. Do ask your question along the whole session, and we will be writing them down and replying to you in our Q&A section. We just want to start off with our short presentation on a little bit about the book and what is planned for valueinvestasia.com, and then we'll go into the Q&A section, right? Once again, my name is Stanley here.
And I'm Man Hong. Let's carry on with the presentation.
Yep. Right. With all our presentation, do bear in mind that we have a disclaimer that we are not talking about any stock recommendation today, but rather more of our opinion and things from our own personal experience. Do your own research and before you invest in anything. Right. For those of you who might not be familiar with me, I just give a little bit background on who am I. I started investing more than about a decade ago, back in 2006, and I'm actually an engineer trained, and I work in automotive plant back in Malaysia when I first started working. And very soon I realized that automotive in Malaysia is actually a sunset industry. So I wanted to change my career, and I went into the CFA course in 2009, and after that went into the finance industry here in Singapore. And I've worked both in the fund management side and also in the investment advisory side, right? Currently, we are the co-founders of valueinvestasia.com. We are a financial site that focus on bringing information about stock listed around Asia to let people know more about what's happening in Asia and some of the opportunity you can find out in Asia. And also I'm the co-writer of the book Value Investing in Asia.
Yep, now on to me. My name is Man Hong, and I started investing I think back in 2008. I think during one of the most interesting times, the global financial crisis. So basically, like Stanley, I'm also an engineer. I took engineering in university. But along the way, I found out about this thing called value investing, and I got more interested in it. So I started on a CFA program, and eventually I started my career as an investment analyst in 2012. Subsequently, I completed the CFA charter in 2016, and as Stanley mentioned, I'm also one of the co-founders of Value Invest Asia and co-writer of the book Value Investing in Asia. You can find out more about us in our bio in our book.
Right. So Man Hong, why did we actually wrote our book?
So why the book? I think the first thing is, over the years, we have heard from maybe friends or family that ask us things about investing in Asian markets. So I think we went to the bookstore and found out that most investment books were US focused and US based, with most of the examples in US.
Right. Yeah, that's exactly the point. And we have to learn all this concept ourselves, and then we experimented it in the Asian market with trial and error, and it was a very painful process. And we really feel that why should Asia be a second tier market when compared to the US? When you want to look for information about stock, there's such abundance of information about them, and yet when we want to find information about Asian stocks, it's so hard to come by, so hard to analyze an Asian company. So yeah.
Exactly right, yeah. We also believe that the future growth is here in Asia. So we wanted to create a reference book of sorts that is tailored to this market. Why so? Because in addition to the earlier points, we realized that most books that are focused in Asia, they are maybe in the extreme ends. They are either too in the introduction level or very theoretical in the textbook kind. Hence, we wanted to create a sort of a practical reference book where people could refer to bridge this gap, so that they could have some examples on practical applications in the Asian markets. We hope to help everyone in their little way in their investment journey by writing up this book.
Yeah, exactly. And also we really believe in the growth of Asia. We are still here in Asia, given that at this current year and age, it's easy for anyone to really migrate anywhere, but yet we are still here in Asia. It proves that we are really positive about the long-term future of Asia. And together with our website valueinvestasia.com, we sort of is seeing history in the making, the rise of Asia, and we want to document this rise, right? And with our new company, we also believe in starting a social enterprise, which is why for valueinvestasia.com, we at the beginning we sort of promised each other that a certain percentage of the revenue will go to a charity and also social and charity focusing on education for the children. In fact, I'm actually going down to visit a few charity tomorrow to decide on which charity to support this year. It's definitely something that we want to do for the long term in creating something. So if you have bought our book, or if you have signed up for any of the courses in the previous this year and contribute to some of our sales, thank you so much. You're definitely helping us in creating that social movement. Right, so the main purpose for our virtual book launch today is a little bit introduction to you to our book. And if you have gotten our book, thank you once again.
If you haven't, now is pretty much a good time as any to get it.
yeah, exactly. I just want to give a shout out to those who have gotten our book. Thank you very much. And if you liked our book and if you want to give some comment or feedback on the book, we're having a little campaign here. If you take a picture with your book and tag us at the Value Invest Asia, and over the course of next month, we're going to choose 5 winners who has the most creative pictures or either comment or review. And the prize is for these 5 winners to have a 30-minute private Skype session with us, where we can discuss any question that you might have where you are not comfortable asking in a crowd about your investment, about your portfolio. I'll share with you a little bit about how I built my own portfolio. It's really something that we hope to gain a closer connection to each one of you. So if you really like our book, and we do hope you can share your favorite part of the book with us. And also, just before we go into the Q&A, we just want to do a quick review since it's September now. For those who has followed us for the past few months, we actually only officially started in April this year, and when we launched, we released a stock guide, which is our watch list stock for 2017. And it includes 10 of the stocks around Asia that we really optimistic about, and we feel that they have great potential ahead. And we just want to do a quick review on how they have actually performed over the years this year. So one of the first company is Wang China, which is for many of you who might know that it is the dairy company that sells a lot of snacks for kids. They actually went up about 15% this year. And Tencent Holding, which is we talk a lot about this company, one of the largest tech company in China. It has shot up quite a lot by 63% this year actually.
And the third one on our list is HSBC Holdings. You might know them as the world's local bank. They are listed in Hong Kong and they have been up around close to 16% this year. Next, we also have CapitaLand Mall Trust. They are the largest retail REIT in Singapore, and they have also have a decent showing of 10% in the past year from April to December. On the fifth one would be CapitaLand Commercial Trust. This is also under the CapitaLand Group. They are the owners of prime commercial properties in Singapore. They have been up close to 27% this year. And another, I put it, real estate link company will be Fraser Centrepoint Limited. They are one of the larger property development companies in Singapore, and now they have even moved on to Australia. They have a good showing of close to 21% this year. And for our seventh company would be Carlsberg Brewery Malaysia Berhad. It's listed on the Bursa Malaysia. They are up 5% and they are one of the 2 key breweries in Malaysia.
Yeah, exactly. And the top performer of our watch list stocks is actually this company called Vitrox Corporation. It is a semicon supplier that's based up in Penang. It has a great showing this year, rallying about 133%. Very impressive indeed. And the only negative stock that we have seen for the year is this company called Tune Protect, part of the AirAsia group, where they provide the insurance that you buy when you are buying an AirAsia ticket. Sadly, they maybe their expectation ran a little bit too high yeah, over the years, and it is seeing some correction now. And last one is Alibaba Group, which of course many of us are very familiar with, part of the Jack Ma Empire, rallying about close to 60% this year. So these are the 10 stocks and their return from our watch list stocks for 2017. Yep, you can see that in the graph, and on average, each of them has returned about 32.5% this year, and one of them is in negative territory. It means we have a 90% hit rate, which it's quite scary for us, given that we know our usual hit rate is only around 60%, and in investing, that's already quite a decent return. So definitely we're gonna be heading to a very, very interesting 2018, I think. Yep. So what can you expect from us at Value Invest Asia for 2018, right? We're gonna release our 2018 watch list soon. We're gonna do it in January, and we want to do it with a little bit more fanfare. So we're gonna held an annual webinar event for 2018 when we release this watch list, and it's gonna be combined with some educational things, more entertainment for you, and also a lot many of live case studies, right? And in 2018 we are already starting to plan more content for you, more exclusive content, especially also interview with some of the Asian founders and businesses around here to give you an insight behind the thinking behind all these businesses. Right. To download the presentation slides and also some of our bonus material, you can just head down to valueinvestasia.com/launch, and you can do that to download all the PDF. And also, if you get our book, once again, thank you so much. Do rate us on Amazon or Book Depository, right? And we can go on to our Q&A. Right, welcome back. I understand that we have actually we sent out some email to all of you guys before a few days before to collect some of your question beforehand, and we have definitely gotten many questions. We have more than about 40 questions right here with us, and we will go through with them. But if you have other questions that you want to talk about, do just comment on the link below, and we will ask maybe 2 or 3 questions right here on our list, and I will go to what you are asking on the board, right? So shall we start with the first one now?
Yep, sure. Maybe we'll just go for the question where everyone is most interested in. I think we received this question from a few of our viewers. The name some, and maybe Debbie, Maggie, and Augustine. Basically, the question goes is, when would we release our watch list for 2018? And a follow-up to that is, is there any interesting companies to watch out for in 2018?
Yeah, definitely. That's the most asked question. What is the stock to buy in 2018, right? Like I said, we're gonna release our watch list 2018 soon in January, so do watch out for them. But if we just speak in a general scheme of things, some of the sector that we are still quite positive about in Asia is some of the tech company, especially the tech company in China. I think they are really gaining ground and becoming prominent in the global scale. And you can see that with Tencent and Alibaba, especially both of them has been very aggressive going global. And also we are quite comfortable with the healthcare sector in Asia with the growing population and the wealth in Asia, more people are demanding higher quality wealth services, and that's really a growth sector for us. And also for me, I really like the consumer sector as well. What do you think? Yeah.
Yep. I think that's pretty much in our watch list. Maybe
Yep. And so our watch list again will be launched in January 2018. So do watch out for that. Yeah.
Yep. Moving on to our next question. Since you've been mentioning so much about Tencent, I think even our watch list in 2017, right?
Yes.
Yep. One of our question is, what are some examples of high growth stocks to invest in? Maybe other than Tencent, what are some high growth stocks in Asia that come to mind?
Yeah. Actually, in our watch list 2017, you'll be able to see some of our companies that we are talking about are actually considered growth company, right? I will place companies such as Tencent, Alibaba, and Vitrox. Consider them as a growth company, and you can see actually these three companies are top performer for our watch list this year, right? And a bigger question is to how do we actually spot growth company. I think growth company is a company where we have to look at where they have a certain type of pricing power, and that is can be seen from their profit margin, and if they are able to have like outsized profit margin from others, that's something that showing us that they have good pricing power, and their business has huge prospect ahead, and also is scalable. It can be easily duplicatable. Do you agree?
Yep. And maybe just to add on, I think if you are faced with a question on is this a high growth sort of company, maybe you can ask yourself these two questions. The first is the business scalable, and is it replicable?
Yep. But what's the difference between replicable and scalable?
Maybe easy way to say is scalable means that this in a certain area, this company has 10 stores. Are they able to scale up to 100 stores, or even 100 users to scale up to 1,000,000 users? And the next one, replicable. If it works in a certain area, can the company replicate this in another area or another country? So these are some questions that, basically these are the main two questions I ask myself first when I look at a company that's considered high growth.
Right. Okay. Now I get it.
Yep.
Yeah.
Do you want to take our first question from the floor?
Right, yeah, sure. Let's take a look at some of their questions. Number one, Victor is asking, do we plan to organize some physical workshop in Malaysia? The short answer is yes, definitely. We are talking to a few of potential partners to come into Malaysia to hold some workshop. So thank you for looking forward to us. Definitely, we hope to have some workshop in Malaysia soon in 2018. Thank you so much for your support.
Yep, so we'll move on to our third question. This is from Dr. Irving Chi. So basically earlier we discussed about were there any interesting companies,
Right.
but now I think one of the questions is, what's the outlook for Asia? Is basically maybe we're looking at markets like Hong Kong, Singapore, and Malaysia. What do you think, Stanley?
Right. Okay. I think the question can be split up into two parts, right? When you're talking about market outlook, there's actually two types of market outlook we can think about. One is the economic outlook of the country, of the market, and also the stock market outlook. These two things actually, they are not the same, right? When you're talking about economic, we're talking about how well the country is doing, how the GDP is doing, how can a country grow as a nation going forward. But even when the economy is doing badly, the stock market can be doing great. Just like in 2009, the economy has not really turned around, but that was one of the best years for stock market in 2009, and that's just because stock market is about the expectation of people, right? And 2009, people are already expecting things to be better, and that's why the stock market rally. And we have to understand that the economic outlook and the stock market outlook, they're not correlated. If they're correlated, then the richest people in the world will be economists.
Yeah, Stanley, but that's all nice and to know, but our viewer wants to know what's going to happen in Hong Kong.
Right. Okay, right. So let's go back to what I feel about the Hong Kong stock market at the moment. The Hong Kong stock market has a brilliant run this year. I think close more than about 20% this year. A lot of it is coming from the tech sector and the rebound of the property sector. Tech sector, of course, is dominated by Tencent's holding. Is a company that I continue to hold. Is actually my largest position in my portfolio, and it's a company I really like and believe in the long term, right? And but the property sector for me, it's a little bit too risky for me right now. I do not really understand how the property market in Hong Kong works, and so it's not something that I'm comfortable in. In Hong Kong, I also invested in a lot of the consumer companies, things like Dingyi or China Mengniu, which is the largest dairy company in China. I like this more stable and consumer-based company, because I see the Chinese becoming a much larger role in pushing their consumerism to the next level, and I definitely believe that some of the consumer company will benefit from that.
Oh, then what do you think about maybe in Singapore?
Singapore, of course, compared to Hong Kong, Singapore is a much softer market, I would say. Especially over the last few years, a lot of my remiser friends is saying that it's a really soft market, and a lot of the delisting of good companies or just large cap companies like SMRT, NOL, Super Group, all these companies delisting doesn't really help the market interest, and interest has really died down quite a lot. But I do feel that the Singapore has one particularly bright spot which I really like is the REIT market. The REIT market, Singapore has always been a property-based country, and I think they have some of the best property in ASEAN, some of the best location in ASEAN, and the REIT market really help you guys gain exposure to such asset, and I really like the REIT market in Singapore.
Okay, maybe we'll move on to our last key markets. We look at Malaysia.
Right, Malaysia. Malaysia is very interesting. I think things are really looking much brighter for Malaysia now, after many years of ringgit depreciation, right? It certainly has been a great few years for exporters, right? Their money is flowing out from them constantly, and but one sector that I think I'm more optimistic about in Malaysia is actually still the infrastructure space. Similar to many ASEAN countries, there's sort of like an infrastructure boom, given that the Chinese money is coming in by very heavily, and this push up a lot of property and also construction companies that they are getting very huge project. You're talking about the MRT or the high-speed rail now in Singapore and KL, and just across the region there's like an infrastructure boom. So great infrastructure companies, definitely worth a look in Malaysia. I think some of the biggest one is considering like Gamuda, MMC, but of course getting huge project doesn't necessarily mean getting huge profit, right? So it's just a starting point for us. You should really dive down and understand it a little bit more.
Yep, I think that's a lot of information for the outlook for next year. And
Yeah.
this is also a follow-up from Dr. Irving. I think we mentioned earlier that the last year has been pretty good for us. So do we expect any serious correction?
Yeah, like I said just now in our presentation, right? I think 90% of our stocks are in the positive, and about 90% of my own personal portfolio is in positive this year. So it really scares me a little bit, because I know I'm not that smart, right? In the past, it's generally just around about 50 to 60% of your hit rate. And Peter Lynch, one of the great investors, actually said that if you have about 50-60% positive on your portfolio, that's actually quite good. In investing, we have to get used to losing money, right? It doesn't matter if just one stock is losing money. It's always to view it in totality as your whole portfolio. If it's doing well, that's the most important thing, right? Yeah. And but having said that, I'm definitely raising a little bit of my cash buffer now that I just feel the market might has overrun itself a little bit. I don't know what will be the crisis. I don't know what I should be fearing, but I'm raising some cash right now.
Yep, I agree. I think market corrections are part and parcel of investing. Ironically, is when we will be happier when things are not that exciting, meaning that there'll be much more opportunities for us around. So basically, one of the litmus tests that I take if the market seems very excited is if people that don't regularly invest in companies, for example, like your aunties, uncles, or friends, suddenly tell you or pitch to you about a certain company, then you should start to pay attention. But I shouldn't say I'm unduly worried, but like Stanley said, in such times I would be more cautious and raise my criteria when looking at companies.
Yeah.
Yep.
Yeah.
I think that's about it. Maybe we'll take one question from the floor.
Right.
I think this is from Willie. He's asking us, are we going to write a second book?
No, Willie. Right now, there's no plans. Unless you want to start writing one, you do let us know. Right.
Okay, we'll move on to our fifth question. This is quite unique. The question is, do we employ a stop loss when we buy a stock? So,
Maybe
you use it, Stanley?
why don't you share with me
Okay.
your methodology first?
Maybe I'll start first. Basically, personally, I don't use a stop loss. But if, let's say, a company that I own tumbles for maybe 10-15%, I will definitely go back and review my thesis to see if is there any really a fundamental change, or if basically it just drops because of market movement. I might look to add more if my thesis didn't change or if I haven't meet my allocation limit. But let's say if something fundamental really changed, the company loses a contract, loses a key person, or something that's a big fundamental shift, I would relook my position. But I don't really set a stop loss for my investments.
Yeah, I totally agree. Personally, I don't practice any stop loss as well. But how I limit my risk is by my size of investment. So I generally tend to just invest around 3 to 5% per stocks or per investment. So in a way, even if I lose 3% of it, it's a loss I can still absorb, right? And the key is to have a diversified portfolio. So some goes up, some goes down. As long as everything works out fine, that's all right. Actually, Manong, I see some of the question building up. Maybe we can try and answer some of them first.
Yep,
sure. Okay, from Gary, how do you address accounting irregularities in Asian companies? Right. Do you have a view on that?
I think we have a view in our book itself. We have a section dedicated to red flags. Basically, we split it up into financial and non-financial. So if you want a deeper understanding, you can take a look at our book. There's one whole section on that. We've come in with examples.
Yeah. Exactly. And I think one great book about financial irregularities is this book called
By
Financial.
Tan Chin Wei, is it?
No, the other one is Financial Shenanigans,
Oh,
which
yeah,
which I learned a lot about how to spot how companies are maybe too aggressive in booking their revenue or delaying their expenses. It's a great book. I think if you are interested to know like very detail on how to do that, that's a great book. I recommend, Gary. Right. And also, I think Victor said we mentioned about holding in cash. What's my cash holding right now? It's actually around 20%, Victor. It's actually the highest that I have ever had for quite some time, since 2008, I think.
Yeah, mine would be roughly around in that range as well. We are both very, you could say that we are a bit cautious.
Yeah, we're investing like an old man.
Yeah, but that being said, if investment opportunity comes, we'll still look at it.
Yeah. Okay. I think Faha was asking a question regarding what do we think of the KLCI since it's December, right? Faha, we don't really have a strong view on how the market is in the short term. But Malaysian market continue to be a market that I personally like, and I don't know. I can't even know what will happen to me tomorrow. So I can't tell the future. Right.
Yep.
Yep. Maybe we go back to one of
Can
our question
I
list.
think for the next question is from W.S. Chung. Basically, he's interested in the ETF space. So maybe Stanley, how is the best way to invest in the ETF space in a cost-effective manner?
Right. Okay. Well, very
Specific
deep,
question.
specific question. If you follow us, ETF is really an instrument that I really like personally. I think it's a great way for investors to gain access on the market and do it at a very cost-effective way, right? I think of ETF as just mutual funds. It's totally the same as mutual fund, but cheaper, right? So especially for those people who are not that interested in stock picking, who are not that interested in researching on stocks, or just looking like spending the time to do it, right? Or don't have the time to do stock picking, ETF is a great instrument for you to just gain access and invest in the market over time. How I can do it is maybe on what we call a dollar averaging,
Yes.
right? You just have a fixed amount every month or every quarter, and then you just invest in one or two ETF that you really like over like a saving plan. Some investors, some great investors that I really admire and follow, they do it what I call a semi-active investing, where they invest in both ETF and stock picking, and they will have their majority of stocks in ETF, and then every month or when they are investing, if they at that month they find an undervalued stock, they'll buy the undervalued stock. If they can't find anything, they just buy the ETF, right? And in both way, they're both invested. Yeah, that's a great way too.
Yep, I totally agree. I don't think I can add anything to that. Yeah,
Okay.
then maybe we'll move on to the question of Thomas. Basically, he's asking, we receive all the annual reports, presentations from the company, but is there any way to contact the management of the company if we have further questions?
Right. When we first started out, I basically just emailed and called them and pester them until they speak to me, right? And you'll be surprised actually if you try to email them. You'll be surprised that actually a lot of them are quite receptive, and you definitely should try and reach out to them. If you still hit a roadblock and couldn't find them, that's what our platform is really hope to achieve as well. Just drop us a note. Some company you really want to find out more about, but they're not talking to you. We can just collect interest among our readers and see who is really interested. We can form a bigger group, and we'll represent you guys to talk to them, and maybe pressuring them to talk to the group of us, right?
Yep, I agree. I also think that a simple email is good enough. You might not always have a 100% hit rate. Maybe you send 10 to 10 different companies, maybe only 6 or 7 reply, but that's good enough, I think. Yeah, and you'll be surprised at how much you can learn from some of these, even investor relations. You don't have to speak to management sometimes.
Yeah.
So yeah, you can start with a simple email. I think the email should be stated on most of their websites.
Yep.
Yeah, maybe we'll take another question on the floor.
Yeah.
By Gary. Basically, he's asking, hold on, do we hedge our currency? And if so, how do we hedge our currency when investing internationally?
Personally, I don't hedge my currency, but I also don't invest a lot in country where I am not confident on the currency, right? I don't invest in Zimbabwe. I invest a little bit in Russia, but not that much. So I don't actively hedge my currency. And to be honest, if you think about it, even if you are investing just locally, either just in Malaysia or in Singapore, you are still exposed to currency risk. You're exposed to your own currency, right? And definitely over the past few years, most Malaysian would have feel, although on paper all of their wealth have not gone down, But in actual fact, given that the ringgit has depreciated like 15-20%, the real wealth has actually depreciated, and that's currency risk as well.
Yeah, you can also think of it as another way. For example, if you invest in a Singapore company, although it's a Singapore company, but maybe 50% of their operations are beyond Singapore. So the company is basically indirectly diversifying 50% of its currency risk on your behalf.
Yep.
So that's one way you can look at it.
Yeah, definitely. I think we have a question from Diana asking, what about investing in stock in US and UK? Right, did you get that? Yeah. You have any view on that?
I think it's okay. I don't have any geographical preference. Basically, what interests me might be a particular industry or a particular company. So, unless if it's in Zimbabwe or something, I should be quite open if it's in US or London, because most of these companies that are listed on this exchange are pretty legit.
Yeah, definitely. I think the US market is something that most people cannot ignore if you want to build a sizable portfolio, given that they are just the biggest market, and a lot of foreign companies also choose just to list there, right? But I invest in US, but not so much not at all in UK, unless you consider HSBC is dual listed in UK and in Hong Kong as well. But I try to see it in a way. Yes, we invest in US, but given that we are already here optimistic about the growth of Asia, I think still a large portfolio of mine is still here in Asia. And even if companies that I invest in US, they have a huge business outside of US, like a company maybe something like Starbucks, where actually their main growth driver now is in China, right? And even if you're investing in US per se, but the growth of the company might not be coming from that. So we always view it from the company point of view, rather than which market we're choosing, right?
Yeah, maybe since we're on foreign company, maybe US and UK companies, one of our viewers, Lee Gun, is interested to say, how do we invest in foreign shares? Do we need a broker in the foreign currency, like US? Do we need a US broker, or maybe if you are in Singapore or Malaysia, do we use a Singapore or Malaysia broker?
Right. Yeah, I think most brokers now they will give you access to most market that you want. Personally, I use Philip and CIMB, and both of them allow me to invest quite wide range of markets. What about you?
Yep, I personally use a local broker. I think UOB-Kay. They also allow me to, other than Singapore stocks, you can buy US stocks, Malaysia stocks, Hong Kong stocks. So I don't see a big difference.
Yeah.
But maybe if you're looking at international companies, you also can. Maybe you heard about interactive brokers. You might want to check that out too.
Yeah, definitely something you can look out at. One of the reader, Ahmad, is asking, how can he learn to find the fair value of a stock? Basically, how can he learn to do valuation, right?
Okay, valuation for us, I think there are three common techniques that we use. Basically, PE, price to earnings, PB, price to book, and DCF. But valuation, these three techniques are basically there. What is the difference is how you view the variables that go in, and it's really a unique thing. What you see at the company might not be how others see at the company. So you read up more on the company to get a better idea of what variables to put in.
Right.
But in terms of techniques, most techniques are variation of these three.
Yeah, it's
Yep.
true. Yeah, it's true. Ahmad, actually, we have a link up on our website. If you just go to our website, valueinvestasia.com, we created a free course where we talk about some of the getting started things that you need to know about investing, and valuation is one part of it. Just go down there and sign up for the free course icon, and you will go to the valuation class, and we'll talk more about that. Thank you.
Yep. Then maybe we'll take one question from the floor by Edmund.
Right.
Do we rebalance our portfolio from time to time?
Okay. Uh, I don't rebalance per se, but how I do it is if a stock ran up too much, maybe it goes to more than 20% of my portfolio, I try to cut it back down. Because when I mentioned that when I invest in one stock, I mostly just invest about 3 to 5%. So when they double or triple, I try to pare them down, just to let myself sleep a little bit better at night. If not, I get very tense up.
I think I follow the same philosophy as Stanley. Yeah, I think maybe there are different styles of investing, but the one that works is the one that allows you to sleep at night.
Yes, exactly. Always check your investing style with your sleeping pattern.
Yeah, we'll move on to the next one by Irene.
Right.
How do you invest together with a group of investors? You want me to start first?
Yeah.
Yeah.
What's your
Maybe
interpretation
how
of
I
that?
interpret of this is, how do you come up with a like-minded group of people to invest? Basically, maybe how do you really judge if you really like investing? Maybe one test is, if you're sitting at home on a Friday night and you are just looking at annual reports, company presentations, and you think that's considered fun, I think you're in the right group of people. Yeah, so you try to find as many of these like-minded people together and sort of form a book club, but it's just discussing on companies.
Yeah.
So the idea is, when you present an company or investment idea that you think works, you allow people to challenge your idea. So at the end of the day, if you can answer most of the questions and you still think that this opportunity is interesting, it might be something to carry on looking at.
Yeah, definitely. I actually have a slightly different interpretation of the question, so we are not sure which one do you mean, Irene. But I thought your question was more of how do we pool money together as a group to buy, right? So I'm not sure why you want to do that, but in a way, if you already have that group, you can consider just buying at the same time. Or if you're just spouses, you can have a joint name account where you invest together. Or if you want to really be more adventurous, there's nothing stopping you from even creating a company, right? An investment company of with all your friends and invest with a pool of money. But having said that, investing just individually on yourself is definitely much a easier way to go, because you don't have to answer to anyone. Your board meeting is just yourself and your mirror. And if you include too much voices into the group, it might actually create more problem, I think.
Yeah, I agree. And maybe we'll just take one more question from our viewers before we go to the floor.
Okay.
Basically, it's a very direct question by Fabian. How do you make more money?
That's the dream, isn't it, Fabian? To make more money. I think the question sort of shows what you're looking for. But I want to let you know that the stock market is really not a get-rich-quick scheme, right? I have never met anyone who make huge growth, a huge gain over a very short period of time, and cap it, right? To really create long-term wealth, the stock market is a very slow and steady process, right? Remember the story of the tortoise and the hare. Be the tortoise, Fabian. Be the tortoise. Right. Maybe we take some question from the floor since it's building up again. Kelvin wanted to know what do you think of the valuation of Hong Kong and Nasdaq index? Is there still value to invest at this price?
I don't really have the numbers at hand, but I think quite a number of companies have run up in value in the past year.
Yeah.
What I would say, I think, is a reinforcement of the previous point. It might be an average that's going up, but there might still be interesting companies
Yes.
to look at. The thing is, at this kind of times, it might help to increase your criteria. So you'll be more stringent in choosing your investment opportunities.
Yeah, exactly, Kelvin. I think that although I said that I'm a bit wary and raising my cash buffer now for 2018, but I don't really want to be completely not invested in the market because frankly, because no one can predict the future. I don't know when the crash is coming, when the correction is coming. But I do know that great company will continue to be great. In fact, if you have bought a great company like the Starbucks or even
Google,
even Google,
Alphabet,
Microsoft, you know, even in Hong Kong, Tencent, at the peak of 2008, you still make money today, right? And it's the same thing going back. We have a statistic going back all the way to like 1995, before the Asian financial crisis of 1992. If you have bought just 10,000 ringgit or Sing dollar on investment in company like Nestle Malaysia, right, Public Bank, all these are at least 20 baggers, 30 baggers for you today. So great company will always continue to be great in the long term. We don't know what will happen in the short term, but have a longer horizon and you will see much clearly. Yeah. Okay, and next one from Daniel. Daniel has a question, very, very long question. With the Federal Reserve increasing interest rate, discount rate should increase and equity valuation multiple should theoretically compress. Does that still hold when they not much better alternative relative to equities? Thank you. Your question confused me a little bit, Daniel. but so are you asking that I should still be investing in the equity market? I definitely am. Even if there's going to be a rate hike or if there's an impending next subprime mortgage crisis in the future, maybe a Bitcoin bubble, right? I would still invest because for myself, I have to be investing for the next 20 years. And I believe that in the long-term future of the global economy, and especially in the Asian economy, yeah. Yep. And let's have Karina. Karina is asking, do you have any thoughts on how you allocate your stocks? Percentage of allocation on home market versus overseas, allocation between REIT and dividend and growth. Right. Okay, this is a very specific question, but one that I think is should be best answered by yourself, because investing is something that you need to be comfortable with. Say even if I invest in, say, 50% of my stocks are growth stocks, it might not be something that you want to follow or that is comfortable for you, just because maybe growth stocks are much more volatile in nature, right? But for me personally, how I started out is I have a big portion mainly in large cap dividend companies, right? So you're talking about the Nestle Malaysia. You're talking about, maybe I include company like would Facebook be that? Not really.
Not really, right?
Yeah.
Maybe REITs.
REITs, some of the REITs where all just this dividend counter, where I have the main bulk of them where I know they're quite stable and they're growing at least with inflation. And then I know that at least half of my portfolio is quite stable and I can take more risk on the 50%, where I look for maybe growth companies or just undervalued stocks, right? That's how I do it. But everyone is different. Choose what you're more comfortable with.
Yep.
Right.
Do you want to take one from the paper?
Yeah.
Maybe we'll go to Christopher. I think this is quite a long question. I'll slowly read out his question. Basically, Christopher says he currently invests mainly in equities listed on SGX. He likes to consider investing in Asian stocks, but is concerned on withholding tax and foreign exchange currencies, which might eat into returns. So is there any guidance on the tax implications, or how do we manage forex fluctuations?
Right. Okay, I'm certainly no tax expert, so if you want a very detailed answer, do check with your tax advisor. But the question of tax is really, if you're, say, a Singaporean or Malaysian, typically there's not much tax issue for us investing overseas. Even in the US, we have just the dividend withholding tax of 30%. So the dividend they declare, we are taxed at 30%. But for everywhere else, it's almost tax-free. I think Taiwan, you are taxed at about 25% as well.
For your dividend,
Yeah,
right?
for your dividend as well. But other than that, most capital gain especially is not taxed, because both Singapore and Malaysia don't tax capital gain. And yeah, is actually the best place to be investing in stock market, I think, Malaysia and Singapore, where our tax structure is quite lenient, and it's really very advantageous to be an investor. Yeah. And yeah, but even that, I think, for currency, on the part on currency, I think there's no way around it. I think all currency fluctuate, and a way to try to at least mitigate that risk is just to find companies that actually is able to withstand inflation, right? A company with pricing power, where if inflation set in, they're able to raise prices, right? A company like Carlsberg Malaysia on our watch list, definitely I think is one such example. When something happened to the currency, it depreciated, and their costs increase, all they do, they just raise prices, right? And what you lost in the currency, you gain back from the profit of the company, and in turn the share price of the company. Yeah. Or do you have anything to add on that?
I think maybe just to add, to reinforce the earlier points, I think one of our viewers asked a similar question. Basically, for diversifying your forex risk, you can also consider investing in companies that have international operations. So basically, they are indirectly helping you to diversify the risk already.
Right. Yeah, that's true.
Yeah. On to our next question on, I think this is a very hot topic. Basically, if you're a Singapore investor, REIT stocks good to invest in?
REIT stock is definitely a good way for you as an income investor, I think. Yeah, but having said that, as I said, Singapore is a property-based economy, and so REIT will always be a big part of it. But you have to understand some inherent risk with REIT itself, because REIT has to distribute out a lot of their income, about 90% of their distributed income. So most of them has very small cash buffer. So if anything happened during a crisis, or they cannot roll over their loans, they will need to do a cash call, and unit holders will be given rights of private placement, and that's a huge risk for you. So when you get distribution from a REIT, don't spend it all, right? They might come back and ask it back from you.
Yep.
Yeah.
But for that being said, I think in the past 10 years, the REITs, maybe from a Singapore point of view, they had a pretty good run. Maybe one reason is because in Singapore, for the retail market, a lot of bonds are denominated in 250,000.
Yes.
That's why for retail bonds in the smaller denomination, there's a limited option. So
Right.
one alternative that people went to is REITs. That might explain some of the rise in demand.
Yeah, definitely. I believe so. Okay. And next question, let's take one from the floor. Augustine is asking, what is your watch list stock for 2018? Augustine, you're late for our event. we spoken about this. We will be launching our watch list 2018 soon in January, so do watch out for it. But as I mentioned, we are long-term investors, so some of the stocks might still be from 2017, will still be in 2018. I think one stock will probably be, I think, Tencent's Holding, a company that I continue to own for a long term. I really like it for the long term, and we're long-term investors, so my view shouldn't differ too much from 2017 and 2018, right?
Yep.
Yeah.
Stay tuned.
Yep.
Do I take from, I think Karina is asking again.
Okay.
Maybe I'll read out the question. One of
Yep.
the sins of investing is selling your winners and hanging on to your losers. Is there any way to tell if the shares you're holding on has the potential to be a multi-bagger, or it ends up being a can of worms? Yeah. What is our, maybe the first question, that's the first question. The second
Okay.
one is, what's our typical holding period?
Right.
And the last one is, do we practice selling to recover our initial capex once our stock gains 100%? So basically, if it doubles, do you sell half so that you get your capital back?
Right. Okay. Okay. Let me think about it. Okay, Karina, I think number one is some people might say they know the secret to finding multi-baggers, but to be honest, we really don't know, right? That's why we diversify. If I know that Tencent has since its IPO has returned about 400 times my money, right? I don't need to diversify. I just buy one stock. But the problem is we don't know. That's why we diversify, and some way to identify a possible growth stocks is by looking at least a company that have a decent track record where at least they have been growing. So we are not like startup investor. We don't go and invest in a company when they are just originating from an idea. It at least has a company that is already have some track record of growth, and especially they have pricing power. The company has shown again and again that if something happened to the economy, if something happened to their costs, they raise their prices and people will still hold on to it. Right? A company is, I think the company with the greatest pricing power has to be Apple, right? It price its product much higher, maybe not much higher, but still the margin is much higher than its competitor, and people still go crazy over it, and that's a sign of strong branding and strong pricing power. That's one. And we want a company where they are operating in businesses where it's duplicatable, right? When they're able to start one product and that product can just scale. So a lot of the tech companies are able to do that when they can multiply their revenue base exponentially when they grow up.
Yeah, maybe I'll take what's our typical holding period. Yeah, maybe for myself I'd say it differs. What I mean it differs, maybe for example if you're holding a income stock or consumer staple stocks, you can hold on for years basically.
Right.
Or things like growth stocks, maybe like for example Tencent that you mentioned, you think that the runway is long, you can hold on for years. But when it comes down to things like special situations, like if there's some corporate action taking place, it might take place maybe in a matter of months or weeks. So you could say that the holding period for myself depends on the company that I'm invested in.
Yeah, definitely. In our book, we also talk about the three types of value that we can uncover in the stock market, right? One is asset value, one is income value, and one is growth value. So for income and growth, my holding period for them tend to be at least 5 years and above, because I know this company has can grow for a long time, or their income is quite sustainable for the long time, right? For asset-based companies where we are buying just because they are cheap, they are just undervalued, my holding period tend to be slightly shorter, maybe about 3 years. When we say short, it's of course not as short as any traders, but maybe 3 years. But as long as the price reach up close to what my own calculation and estimation is, I will sell out, right? Yeah, that's how I do it.
Yep. So maybe for the last question is, if a company that you invest in shoots up by 100%, do you sell half of it?
No, I don't. Normally I don't. I only sell it when I have problems sleeping at night. One company that I sold down is this company in Singapore. It's a tourism asset company, Straco, where they own the Singapore Flyer as well, right? And some tourism asset in China. When I bought it, and it shot up, I think, from 30 cents close to 90 cents, and it went to about close to 20% of my portfolio, right? And I'm just not comfortable holding a mid-cap stock with asset so far away in China that I don't really know what's going on, and so I just have to pare it down back to a reasonable level. That's only when I pare it. I don't really pare it down just because to get back my money, because once I get back my money, I need to invest in it as well, right? And if I can't find anything else, I'd rather just put it in the company.
Yep, I totally agree.
Okay.
And maybe we'll come to a simple question from Grace, of our viewers. What does return on investment mean?
Right. Return on investment, I think it's a way you're talking about, a way to measure your own return efficiency. So if you are investing, say, 100,000 this year, and next year you gain 10,000, that's roughly about 10% for you, right? So your ROI is about 10%, and it's just a way for you to measure yourself, see how well you are investing. Similar to how you will measure a company using return on equity, right? ROE, where you take the net income of the company divided by the equity
yeah.
of the company to know how much profit the company is actually generating from its equity base, right? For how much money is invested in, right? Right. I think our question is building up again on Facebook Live. Let's try and cut it down. Daniel again. Thank you, Daniel. What I mean is, will the market revalue company at a lower valuation multiple with higher interest rate selling down? Right. Okay. So you are asking if we feel that with rising interest rate, the stock market will decrease in multiple. Over the long term, yes. Is if personally, I think if the interest rate is gonna be staying high, going back to, say,
If it's perpetually
increasing like maybe 7-8% for the next few years, I think definitely the multiple for shares should come down. But having said that, that doesn't mean the earnings of a company should go down, right? The earnings of the company can still go up, but multiple decreasing, that's possible as well. Yeah.
But will it stop us in investing?
No, not really. Will it stop you from investing, Daniel? Okay. Alvin has. I think let's go through most of the question first before we jump back to our list. Alvin is asking, do you consider buying Bitcoin an investment? Did you buy Bitcoin before? The answer is yes. I own some Bitcoin. I think I bought it around 1,002 when it was 1,002, but I don't see it as an investment. I see it as a speculation. I don't think that you can in any way see it as an investment. I'm buying it because I'm curious about the development of Bitcoin, and I see it as a bubble. So I wanted to test myself to see how I will react in a bubble, right? And it has taught me a lot of things. Of when you see your investment shot up 15 times within a few months, you feel very smart. You feel very smart, but at the back of your head, you know you're not smart. You're just lucky, right? And I buy it to test my own emotions and my psychology when it comes to that. But if you're really thinking of buying, I cannot stop you. It's your money, right? Do whatever you want with it. But I'm buying just with money that if tomorrow Bitcoin go to zero, I'm okay with it. It's not a big amount, and I'm just playing with money that I can afford to lose, right? And if you really, really want to buy a lot, I'll share with you something, right? Buy some Bitcoin, this one. It makes you feel better and stop the urge from buying a lot of Bitcoin. Yeah. And who is asking again?
Daniel.
Daniel.
It's Daniel again.
Yes, Daniel again, right? Tencent has corrected around 10% plus recently to 51 times PE. Do you think it's an opportunity to buy them? Alternatively, would you recommend to buy Napster instead, which the market is pricing at a discount? Okay, just give a little bit background. Napster is actually the main shareholder of Tencent. It is a telecommunication company based out of South Africa, right? And they invested in Tencent way ahead, way ahead. And now Tencent is actually their largest holding compared to anything else. Something like Yahoo, I think.
You could say that they are Tencent.
they are Tencent. Yeah, they're 30% Tencent. I personally is not invested in Napster. I'm invested in Tencent. I don't know why I'm not invested in Napster, but I also don't know why the market is really pricing them at a discount. I believe that if you want to buy Napster instead of Tencent, is certainly a possible strategy. But a holding company has a discount, and just because it is at the discount now, it doesn't mean that it will go back to par value at any time, right? It's similarly to buying a property company at below price to book. Does that mean that the property company will go back to one times book? I don't know. But just because there's a discount, I don't think there would be a repricing just after you bought it, right? Okay, and okay, Steven is saying hello. Good to see you all. Hello, Steven.
Good to see you too.
Okay. We have Peter here. Reading a book. Finally got a copy from London. Thank you very much. Good to know that our book is in London. Hope you really like it. Do tell us how you feel about it, right? Thank you. And we have Gary again. How do you track your return? Modified diets, how do you pronounce that? And or capital weighted, right? How do you measure your own performance?
I think there are two ways that I track it. First one is I track it by individual stock basis.
Okay.
The other one, if you track it by entire portfolio basis, it's I think one of the easiest way to track all your holdings.
Yeah.
So those are the two ways I look at it.
Okay. Yeah, measuring a portfolio actually is very, very subjective. I realized at the beginning, because when I talk to some friends, they are telling me how their portfolio gone up like 50%, right? But the way I realized they measure is a bit different, and maybe some of them even just measure those that are making money and not look at those that are losing money, right? But how I measure it, I see my own portfolio as a fund. So as a mutual fund or ETF, they will measure a NAV of the fund. It's basically when I first started investing, say I put 100,000 inside, I will issue myself 100,000 shares of my own fund, which is I'm buying 100,000 of $1 of that fund. So I have 100,000 invested, right? And as I invest and the price goes up, maybe it goes to 120,000. So now my asset is 120,000 divide still by 100,000 shares only. So my NAV become $1.2. It means I have grown in 20%. Okay, and whenever I'm adding new money at that time, I'm buying more units of the investment fund at now $1.2, right? So as you add on, your NAV price entry will be different, and I track that NAV every quarter to see how I'm doing over the years, right?
I think this is a good idea for an article. So yeah, guys, remember, if you have $1,000, if you add $500 in your own portfolio externally, it doesn't mean your portfolio increased by 50%.
Yeah, definitely.
Maybe we'll take one question from Bud. He's asking about what are our thoughts in investing in maybe this is called an emerging market,
right?
Vietnam. From basically he hasn't really invested there yet, and he wants some of our thoughts.
Right. Okay. Right, but Vietnam is definitely a very, very interesting market, but I myself have not studied a lot about it, and I'm not there comfortable yet to really invest in anything in the country. But it's also very hard to access, given that it's an emerging market. I think normal investor want to access, it's very hard to invest. One way to do it actually is just to invest in company already listed but is starting to invest into Vietnam. So company like FNN, I think Jardine Cycle and Carriage, right? They're both aggressively investing more and more into Vietnam. And so if you want to gain access of the markets, that's one way for you to do that.
Yep, exactly. I think the company that they're interested in is a company called Vinamilk.
Yeah,
one of the,
okay.
You could say the key dairy
the company.
Yeah,
okay.
in Vietnam.
Like the FNN of Vietnam, right?
Yeah. In a way, yeah.
Okay. Another one is Ang, who is asking on Bitcoin. We talked about that just now. Do just buy with money that you can afford to lose, right? Desmond is asking, is there any good blockchain company in Asia, right? Desmond, that's a bit out of what our circle of competence is, because most blockchain companies still very young, in infancy, and I don't see any listed yet, and we focus right now at least much more on the listed market. And but I did find a few good articles about it. Maybe I'll share it down on the list below for you. You can check with it. But this is more on the realm of startup investing rather than equity investing, right? Yeah, hope you like it.
Yep, that's the link right there.
Yep.
The next one is by Value Alpha.
All right.
Yep. So Stanley, what's your most memorable or greatest loss? So what have you learned from it?
I think talking about loss, why don't you start first?
Maybe I'll highlight one company that I made two mistakes on the same company. I should frame this company up on the wall or something. So basically, it's a luxury menswear company in Hong Kong. I invested right before or maybe during the time when the corruption cracking down was happening in China. So basically, one of the two mistakes, the first one is that I learned is I underestimate the risk of how things could go south, especially for a small cap company. Yeah, so that's the risk in investing in small cap companies. Things will get amplified.
Yeah,
and
exactly.
the second follow up is I didn't allocate my capital correctly. So in terms, I might have over allocated. That was how I learned not to, for my own personal style, not to put more than 10% in a single company.
Yeah.
What about you, Stanley?
For me, it's not so much on a loss from my investment, but rather an opportunity went by, right? It's a company that I sold too early. It's this company in Malaysia called MyEG Holdings. Is basically, if you think of it as the virtual post office, it can do everything that you can do on the post office to pay your summons, renew your license and everything, but online, right? They will send the license to you. I really like the model, and they become the go-to company to help government department digitalize their SOP, and I really like it, and I bought into them I think back in 2011, right? When they're just about 30 cents. But then at that time I was a very serious value investor, so I fixed my price target very strictly with my margin of safety, and I assumed the company is worth around just 80 cents. So when it shot up close to 70 cents, I sold out, right? Happy with one bagger of my investment. I feel very proud of myself. But as the company continue to grow, it just like I said, the model is so easily duplicatable. They just go on to do other government departments, and they just grow and grow. And if I just invested from there till now, I think my money is about 15 times my investment, but rather I just walk away with one time, and that really taught me a big lesson, which is valuation is really just an opinion, and it's your opinion, and you shouldn't treat it as gospel, right? It's just an opinion, and you should be sometimes look past it and focus more on the quality of the business, right?
We'll take one next question from
Yeah.
the paper first. Which by Tom. I think this is a similar question, but which brokers do we use or recommend for investing in Asia?
Right. Yeah, we went through the question before. I think most of them are relatively similar nowadays. So I personally is using Philip and CIMB, but that's not an endorsement for them in any case. I just happen to have them all along, so that's what I use.
Yep. And maybe a question by Chanan. So Stanley, maybe to put you out on a limb here, will Singtel move up this week?
Ta-da. Oh, Mr. Singh, you really caught us there, right? But I'll tell you what, we will go out on a limb, right? On Singtel, we will actually make a prediction there. My answer is yes. I think Singtel will move up this week. What do you think?
Yeah, for my side, maybe a move up, but I also think it might move down.
So there you have it. Frankly speaking, we don't know.
We have no idea.
Right. And the last one from our list, let's go finish up the last one and we'll go all the way to what we have on the board now. With so much disruption around, how do one assess its portfolio whether it's being disrupted? How do you know your company is being disrupted?
I would think that change is a cliche, but change is the only constant. Yeah, so in general, business have to keep evolving and adapting basically to change one way or another. If the business is in a basically a dying industry and they are not willing to change or to try out new things to grow the business, you might want to take a look at the company again.
Yeah, definitely. Another way is I don't think we will be very good at spotting disruption when it is happening. But one way is I access the management, right? I think all businesses will change, and so the management must be willing to change, right? And if you find a company or management that is just sticking on to the old ways and not changing, that's a sign that if disruption come for them, it'd be very dangerous, right? And second part is when the disruption is already so obvious. One company that I sold this year, I think I only make 3 trades this year and I sold only one company this year. And that company is Dairy Farm International, which is the grocer retailer, which owns like Cold Storage, Giant, right, Guardian. I sold them not because they are doing poorly. I still like the business, but I just see that all the big e-commerce sites are going into grocery now, right? With Amazon coming in, with Alibaba taking so much investment into Lazada and RedMart. I think even if you can see that Dairy Farm is actually called the incumbent in this industry, but with all the big guys coming in, they actually become the small guys, right? Even though they traditionally own the industry, but the people coming in to fight them is so massive that I don't know, I just see a bloodbath coming in. I don't want to be in the bloodbath.
It helps you sleep better at night, right?
Yes, definitely I want to sleep better at night. Right, let's go to the board. I think we're up to Terence. Terence is here. Terence is asking, tonight is the FOMC meeting. Will it affect the share price tomorrow?
Are we going to go out and leave again?
I wish I know. Right. Melvin is asking, what is the reason behind the drop in ST Engineering's share price? Right. Do you follow the company closely?
I think your guess is as good as mine.
It's not a company that we focus, we look too much at. So I'm not able to help you with that, but I certainly, you piqued my interest. I wanted to know more about it now. But the one reason why it's not on our radar for this company is because they just have a little bit too complicated the business, right? And a lot of their contracts are with government, with the military, which is closed door and we are not able to know. So in a way, I cannot access how well they are doing. I don't know. There's no sources for me to find out how well they're doing, and it's just a little bit too complicated for me. And I'm a peace-loving guy, and all the war stuff is a bit too much for me as well. Right. Where are we now?
The John.
Right. John asks, do you rely on chart, volume, and pricing action when making a purchase? No. I think in the stock market there's a split between fundamental based and technical analysis, and we are purely, I would say, in the fundamental base camp, and so no, we don't really rely on chart. We don't really believe in chart, to be honest.
And I don't think we'll do a good job interpreting the charts too.
Yeah.
Yeah, so basically when making a purchase, we access the fundamentals of the company.
Yep.
Yep.
Yep. So are we close up already? Okay.
I would think maybe a last question by Daniel, is it?
No, I think that's roughly all the question that we have.
Oh, okay, yep.
Right. Thank you so much again. I think
Thanks, guys.
yeah, it's a wonderful speaking with you guys. I will leave the video up for the next few days just for you to just catch up if you are unable to view it fully. And of course, this is the book launch for the value investing in Asia, which is now out in all major bookstores. And if you want to download what our materials for today is at valueinvestasia.com/launch. Have a great holiday, guys. See you next year.
Yep, see you. Thanks.